time and joining us today. Thanks indeed. Dinshaw Irani is now joining us. He's CEO at Helios Mutual Fund. Dinshaw, great to have you with us here. Good morning. Thanks very much for your time. Prashant this side. I want to start by asking you, how's life? Sorry, I said, oh, that's good. Well, thanks for that. How's life changed then? I wanted to start by asking you that with the mutual fund and the new role. How's the day-to-day changed?
Well, I keep much more quiet nowadays. I don't talk too much. I'm much more aware about my surroundings and environment and stuff like that. So I'm much more sticking to the compliance rules. So that's all that change has happened. Otherwise, on the investment side, we still remain the same. So there's no change there.
And obviously, you're listening more, right? You're listening more closely. Good morning, good afternoon. Yes, I think. Before elections, we used to do for years, a straw poll about outcomes. We get at least not the actual results, but exit polls later this evening. Do you want to take a shot at it broadly? What's the what you think is the most likely outcome?
I wouldn't take any shot at it, but I think the best scenario for the market would be that things remain status quo. And if at all the ruling party loses any of the states, it should be with a big margin. Even if it's a marginal margin, I don't think the market will take away too much from that. So unless the results are very deviant from what the expectations are, I don't think the markets will be impacted to that extent anyways. But that's one of the I think things out of the way for the market, I suppose. I don't see the market anyway. We actually don't expect the market anyway to rally too much or to fall too much on the back of these results. That's what our feeling is.
Prashant, he just said that now it's far more about compliance. He's speaking less, being very aware. And then you're asking him to predict politics, really?
No, because that's clean outside the ambit of compliance and all these other issues, right? I mean,
I think that's why he'll be the most careful as any practitioner from the financial services world. So I'm with you. I understand that positioning, Dinshaw. Let's come back to the market. So you just said that you're not expecting a fall, you're not expecting a big tearing rally either. And what's the best way to play it? I mean, mid-caps are still doing very, very well. So what's the best way to play it then if consolidation is what you foresee in the near future?
Yeah, so we actually in a consolidating market, that's the best that a stock picker wants, because he then can really spend his time on his ideas and work through them and probably gather the position that he wants to. And that's what I think we are good at. And that's why we are taking our own sweet time. And in fact, even in a flat market, you get to see these stocks which move up during these flat markets. And that's what we try to identify and we work with. And frankly, I mean, our focus has really been on consumption plays and on finance. And obviously, in certain cases, we also looked at state companies which we feel have offered quite a bit of value at these levels as such. So we're working our way through this, and I think that's the best way to play it out as such. Look at your valuations, be comfortable with them, and obviously your future has to be in, I mean, the future growth story has to be in play for you to work there. So.
Hi, Dinshaw. Good afternoon. Good to see you in. Dinshaw, I wanted to ask you about something that you just mentioned, consumption story. What do you like? You like the discretionary part, I think, is what you've been holding on in the past few interactions. So give us some clarity out there. And in terms of the government-owned companies, from which sector?
So, okay, Nigel, so basically discretionary is what we're playing with. And here again, we are very specific about our discretionary plays. In fact, we probably would be having stocks which are more of an aspirational luxury or, aspirational sprints. Rather, that makes up a big part of our chunk of our portfolio. Mainly premiumization is what we try to play with in the consumption space. On the PSU front, obviously, we are looking at, apart from the largest bank that is on offer in the PSU space, we also have plays within defense, we have plays within utilities or energy space, where we think there's a lot of value happening. So these are the kind of spaces we are in today, in the PSU space at least.
Dinshaw, since you brought up PSUs and we were discussing, this with our previous guest as well, this entire pack, because it's really been one huge outperforming sector this year, right? I'm going back to the question on politics. Now, if at all there is some sort of a disruption there, if there's an outlier event, state elections now and, general elections, or any confusion about, the continuity of the present regime, could that be a reason that may trigger profit-taking on these stocks? Is that something that investors should be wary of? Or do you think the intrinsic PSU story is so strong that the stocks will continue to move on their own merit, irrespective of what happens to elections?
So state level, the local elections, which are, the 5 states which are going to be out, some trend will be, I think, visible by the end of the day today after the exit polls come out. But I don't think that will be the one which will be a decider for these kind of things. The central election, obviously, whenever it's in May as such. But the fact is that if there's any adverse result that time around, obviously the story will be a bit postponed. I don't think it'll be over and done with. There'll be probably a pause in the story, and probably that whichever new government actually comes in, I think they've realized the way forward is this: you need to have growth, you need to have reforms, and that is only the way forward for you as such. In fact, we are on a very steady pace. In fact, today there was a report by one of the big broking houses. In fact, yesterday evening was the report by one of the big broking houses, which mentioned the same thing. That the way forward is this, and by 27, you're looking at being the third largest. So I don't think any government would want to, any new government which comes in, if at all, would want to take a pause on that story. So maybe I think that will continue. And obviously, markets are always have a knee-jerk reaction initially, and then probably semblance comes in at a later phase. So maybe you'll see some kind of a fall in PSUs at the time of that result, and then things will again work out the way you want it to.
By the way, you said you like between consumers, you like discretionary. What in that space, Dinshaw? Within discretionary?
Yeah, so basically, as I said, mainly the ones which are taking care of luxury spends, like hotels and then probably real estate, and obviously the apparels, the luxury apparels and stuff. Not luxury, but at least we're talking about formal apparels and stuff like that. So these are the kind of plays that we're playing out here, jewelry manufacturers and stuff like that. So that is what we like, Prashant.
What about on the auto space, Dinshaw? I think the preference was for auto ancillaries in comparison to the autos. So how are you positioned there? Ancillaries of the two-wheelers. The two-wheelers actually have come back in style. The number of units sold may not be as much as 2017, but premiumization is playing out yet again over here. How do you approach this space?
So, Nigel, the point is that in the auto space, we were very concerned, we still are concerned about the EV onslaught as such. And I think two-wheelers are somehow a lot impacted by that. And frankly, what you're seeing today is mainly, I think, coming off a very low base as such for two-wheelers. And fortunately, the marriage season has kicked in a big way, and you're seeing a lot of offtake in the two-wheeler space also. In the PV, again, we are very concerned about the EV playing out in the future. It still hasn't played out as such. We don't think any of the players, the domestic players, are geared enough to meet that onslaught as and when it happens, the EV and hybrid onslaught as such. So that's why we are staying away from that space. And the ancillary part, I don't think we are also keen there, because if your OEs are not going to make money, there's no way the ancillaries will be allowed to. So we are away from that space also to a very large extent as such. So that's where we are.
Dinshaw, I want to go back to the first statement that you made, where you said that you're not expecting the market to fall, but you're also not expecting it to sort of go up in a tearing hurry. Now, why is that? One could argue earnings have been pretty decent, stable. This whole US 10-year bond yield issue, the interest rate, big fears, perhaps they've subsided. We've discussed elections already. That's the only outlier event. But aside of that, why aren't you expecting a bigger rally now?
So, Subi, the point is that even this quarter which went by, though the earnings were very exciting, but look at the top line growth. That didn't do much. In fact, if you take away a few industries, there was a degrowth in earnings overall for the index I'm talking about right now. So that's why we believe that there will be only pockets which will work. And frankly, you don't want only pockets to work for the whole market to fire. You need the whole everybody else to participate. So going forward, we don't see. I mean, in fact, if you talk to various players on the in the market, they talk about some kind of a slowdown happening in terms of consumption. There's a limited amount of potential. In fact, if you talk to FMCG guys, which highlighted that they're looking at a rural economy firing, they themselves are now telling you that no, it was a false green shoot, and we're not seeing that anymore as such. So you need every other component to fire. And frankly, I mean, in fact, when you talked about the US also, the yields have come off on the longer dated paper. But still, the difference between the 2 and 10 is still some 40 bips, which is not too exciting. In fact, if anything, the yield curve has normalized from 5-year onwards as such, which is at a much higher rate, which is a fairly concerning part for, I'm sure, the Fed in the US, and they want it at much lower level. So I think there's still a long way for them to work this out. I don't think they're out of the woods as such. So these are the kind of things that are playing out. On the India front, I don't think apart from the rural economy, there's much of a concern as such. But frankly, I mean, if you talk about the way US is or the way China is, that's like 1/3 of the global economy, which is not firing to that extent. So that's a concerning area. I think that's what's holding us back. And that's why we believe that at least the market needs a quarter or two of consolidation before a new move starts happening.
Okay. All right, Dinshaw, pleasure listening to you. Thank you so much for taking out the time and joining in. And we look forward to the next interaction. You have a good rest of the day.
Thank you.
We'll take a break. On that note, on the other side, as always, we'll get you on all the buzz on the dealing room side. And then, of course, a couple of trading calls coming up with Mitesh Thakur as well.
Well, thanks so much for tuning in to CNBC TV18. Make sure you follow us and stay updated on all our social media platforms.